What's going to create the biggest opportunity set? The multiplier in all of this is crypto. It always outperforms all other assets, particularly in these moments. And crypto, again, is such a beautiful thing. This won't last forever, but it's a gift for us because you get 3 years where it's the best performing asset on earth. That's through macro crypto spring, summer, fall. Crypto macro winter, when the downside of the debt refi cycle comes, it's the worst performing asset price on earth. And we just keep repeating. The lows are higher. It's just an exponential, logarithmic trend that keeps going because of adoption.
Raoul, a prominent figure in the financial world, is eagerly eyeing the 2024 crypto bull market. His optimistic outlook revolves around the potential for substantial gains in Bitcoin and the entire digital asset sphere. The prospect of higher interest rates has been affecting markets for 2 years, but the direction of rates has now hit a turning point. In 4 of its last 5 meetings, including the one ending December 13th, the Federal Reserve has held rates steady after raising rates 11 times in this economic cycle. Few analysts doubt that the end of rising rates is near, as inflation, which fell to 3.1% in November, comes increasingly under control. Looking ahead to 2024, Powell anticipates sluggish economic growth with a continued decrease in inflation. 2024 is set to be one of significant political upheaval and economic instability. As countries representing 60% of the global GDP head to the polls, governments, businesses, and households are adopting a widespread wait-and-see attitude that will likely delay critical economic decisions. Meanwhile, Bitcoin has outperformed practically every asset class imaginable, leaving traditional investments in the dust. 2023 marked a good year for Bitcoin, outperforming the Nasdaq substantially. Bitcoin's growth was reported at 150% increase, contrasting Nasdaq's 53% increase. Powell notes the nature of the market, aligning the Bitcoin halving cycle with broader economic cycles and elections, foreseeing robust growth until at least 2026. Now, let's focus on the video to explore more. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
My view and my macro work was that the present state economy is bottoming right now. All the future forward-looking indicators all bottomed. Global liquidity, global financial conditions, they all bottomed last year. And the market's priced in a recession then. We've still got markets that are cyclical pricing in a recession now, stuff like the Russell 2000, oil markets, commodity stuff. But really all the forward-looking stuff priced it in a while ago, and it's been following financial conditions on a forward-looking basis. From all of the work that I do, I see nothing but stimulus coming this year. To Tim's point, there's, stimulus is another word for debasement of currency, and they do it in a number of different ways. The worst one, the most pernicious one, is the printing of money and putting it on the central bank balance sheet, using the balance sheet to buy debt, because what you're really doing then is pure debasement of currency, and most people don't understand what it is. They don't understand the fact that their purchasing power in asset terms goes down. So assets optically go up in value because the purchasing power of the dollar versus scarce assets goes up. And, crypto has been the best horse in that race. Technology has been particularly good at offsetting it. If you divide the S&P by the central bank balance sheet, zero performance since 2008. Gold, zero. In fact, gold is negative. Real estate, zero. It's only Nasdaq, only technology and crypto that's actually outperformed the debasement of currency. So it's really important what horse you back. So we're going into 2024. We've got sluggish economic growth. I think inflation will continue to fall all year because I think structural issues within the economy, from aging populations to AI, will actually surprise people to the downside with inflation. So I'm not an inflation sticky person. There's different types of inflation, right? We're talking asset inflation caused by debasement of currency versus CPI inflation. In an election year, the government's job is to give out as much candy as possible to voters. All they want to do is buy votes. You will always get stimulus. Since 2008, we had a great reset of the debt markets. Every major government hit 100% of GDP in debt by 2008. That's the Europeans, the Brits, the Americans, Japanese, Chinese. And what they all did was cut rates to zero in 2008. That was essentially a debt jubilee. It's like you don't pay the interest on the debt. That's really what it was. So if you don't pay the interest on the debt, what did they do? They all refied all of their debt. So it's 100% of GDP in debt. So all economic growth essentially goes to paying off the interest payments on the debt. So what you need to do is lower the interest costs of the debt. They did that, and every government reset their debt to 3 to 5 year. That 3 to 5 year cycle is the debt refi cycle. It's exactly how the economy has been working. So you come into year 4, it's the down year. That's when the economy slows because rates have gone up because they have to try and refi. What happens is rates then fall. They use the balance sheet, and they use the balance sheet to pay off the interest of the previous cycle. And I've kind of proven that out over time. That 4-year cycle is exactly the same as the Bitcoin halving cycle. Why? Because Bitcoin came in 2008. It's also the same as the presidential election cycle. Why? Stimulus, right? They're all the same thing. So it is the most observable economic environment of my 30-odd year career. And it's so obvious what 2024 and 2025 are, and that's more stimulus. They're going to be cutting rates. If they screw it up and inflation does go up, they will use yield curve control, which is printing of money, to maintain interest rates, which Japan has been doing. But generally speaking, it's a year of stimulus. In a year of stimulus, as investors, we need to say, okay, what's going to create the biggest opportunity set? The multiplier on all of this is crypto. It always outperforms all other assets, particularly in these moments. And crypto, again, is such a beautiful thing. This won't last forever, but it's a gift for us because you get 3 years where it's the best performing asset on earth. That's through macro crypto spring, summer, fall. Crypto macro winter, when the downside of the debt refi cycle comes, it's the worst performing asset price on earth. And we just keep repeating. The lows are higher. It's just an exponential, logarithmic trend that keeps going because of adoption.
In the U.S. exchange-traded fund market, valued at around $8 trillion, the expected introduction of Bitcoin ETFs is a significant development. This space is presently dominated by 3 key players, Bank of America, Goldman Sachs, and JP Morgan, who are recognized as authorized participants. While cryptocurrency firms may still be recovering, a wave of major financial institutions, including JP Morgan Chase & Company, HSBC Holdings plc, and Franklin Templeton, are initiating new systems built around blockchain, signaling a notable push into 2024. According to CryptoSlam data, Solana has edged past Ethereum by a slight margin, securing its position as the second largest blockchain for NFTs. Overall, the ongoing adoption of cryptocurrencies and the expanding use cases, as witnessed by Raoul since 2012, indicate a continuous bullish trend. We've got a few clips from the interview. Let's focus on those.
We've now built the ETF, which I think of as a trade deal between crypto land and fiat world. It's not immigration into crypto land because these people are using centralized counterparts to do this, as opposed to myself, who will use my ledger device for self-storage. But we're going to bring a lot of FDI, foreign direct investment, and tourism income into crypto land. Huge amounts of it because of the stimulus and the fact that it's the best returning asset price on earth. So we've got that to also ignite this crypto economy. On top of that, Tim and many VCs like him have piled money in 2020 and 2021. 67 billion went in. That money has been building applications layers, infrastructure layers, all sorts of stuff. Right? A lot of this will come to market. Some of it doesn't. Some of it failed in the down cycle, but there's a lot of stuff coming to market. And so how I look at this is this cycle, as we go from 516 million wallets to, I think, 1 billion and beyond in this cycle alone, that it's going to be an everything, everywhere, all at once cycle. All of the kindling is in place. The banks, all the asset management firms are both investors, but are also building on blockchain rails, all of them. So whatever Jamie says, and I've spoken to him directly about this, that he's wildly interested in this space. And they will, JP Morgan, Goldman, everybody are building on these rails. The big brands are building on the rails for Web3. We're seeing a lot of that already in sports teams, car companies, luxury brands. I think the breakthrough of Solana compressed NFTs, allowing for 1 million NFTs to be minted for $100, means that allows ticketing and other breakthroughs of what we can use NFTs for, because NFTs are not just PFPs and stuff like that. In addition, the ongoing rise of stablecoins. That's basically a tokenized euro-dollar market that allows somebody working in the rice fields in the Philippines to own dollars, which is impossible for them. And then just the ongoing adoption of crypto. So I know it sounds ludicrously bullish, but that's where we are in the cycle. I mean, I've been in crypto since 2012. And each time you just see it grow and grow and grow as more participants come and more use cases get built out.
The United States appears to be steering toward a soft landing despite grappling with economic challenges. Even as the economy expanded by 2.4% in 2023, the pace of growth is projected to slow down. Notably, Bitcoin showcased exceptional performance throughout the year, outshining traditional investments by a significant margin, showcasing its increasing dominance within the market. Would the rising performance of Bitcoin and the upcoming launch of Bitcoin ETFs indicate a shift in conventional investment approaches? Share your thoughts in the comments section. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.